Microvision stock, ticker MVIS. This is the hottest trending stock on WallStreetBets right now. This is another big short squeeze, and then right behind that is Gamestop and Tesla, which are the other two huge short squeezes. This video is by request from a viewer named Carrie, and we are gonna cover. I looked at the balance sheets. We've got due diligence, some fundamentals. I've got the technical chart setups, some trade ideas, and then a little bit of macro, and I'll cover GameStop and Tesla as well, some general market. This should be a really good one. This is the whole deal on Microvision, like why it's short, how the shorts are operating, and then what's the deal with the squeeze. So like, share, comment, subscribe, turn on notifications. Let's check this out. All right, here's the long-term Microvision chart on the weekly. And so this goes back to their IPO in 96. So you can see they IPO'd around 40. They had a huge speculative blast for a few years up to, goodness, 550 or something a share. And then this has been just a killer short trade for a very long time because they just keep issuing new shares and issuing new shares. It's a tech company. They're trying to develop tech. They're trying to sell, basically trying to develop the tech and sell their whole company to a larger company that wants to buy them out, which they have not been successful at doing. And they just keep issuing shares and not getting bought out, and keep issuing shares. So they're just raising capital by issuing shares this whole time. So this has been a great short trade for a long time. And then we have the COVID crash down here. Look at this. It goes to 16 cents. So big bankruptcy risk here, and yeah, good on you if you got this thing at 16 cents. But now we'll take a look at the balance sheet in a sec. But now the shorts are getting squeezed. So we had the bounce after COVID, and now we're getting short squeeze action, which is pretty interesting. And let me yeah, here we go. So this is their balance sheet, Microvision MVIS, yeah. So you look at the current assets versus the current liabilities, and you can see that, and I think this is in the thousands, 17. I don't think the numbers are actually this small. I don't know what the multiplier is on this sheet, but it doesn't matter. It's just the ratio of the current assets versus the current liabilities. And you can see the assets are ahead, and last year it wasn't. So coming into that COVID crash, you could see that their balance sheet was upside down by half, and then we had the big crash, all the bankruptcy scares, all that stuff. So it really crashed down hard, and yeah, and then we got a bounce. So let me get on I think a daily to get this trend line tightened in. Nope. Hourly? Where did I draw this line? Yeah, okay, this is an hourly. Okay, so let's go back here. After this COVID bounce, we picked up this bull trend line in May. Yeah, 16 cents, and it's around $1. We started picking up this trend line, and it wobbled a bit, right? And then around January, we did our first bullish flag on top, and then we just did our second bullish flag on top this month. And so we got a really big, good corridor kind of bull flag consolidation to the downside here, and a huge pop. All right, so this is where we are now, and yeah, the general idea with this is there's tons of people short. This has been a killer good short trade for a long time. This is one of the most shorted stocks. It has 20% short interest right now. And this is, trending huge on WallStreetBets because it's making big up moves, and it's another big short squeeze. All right, so let's take a look at what's going on with the chart just from the technicals. So, I mean, we got this, bullish bounce here, flag, another one. And obviously pulling back pretty good today. And so I mean, sometimes you do just get like a parabolic reversal like that. That's not very common. That usually only happens on like a big news blast with like a fake move up. But this guy is a multi-day move up. It's not like a single day, use blast reversal. Anyway, I think the most bearish look you can get is if you go into another vertical, a lower peak. Like those have that's a bearish formation to watch out for, if that happens. But what happens more often is this will bounce after a check back and it'll start to roll over. And when it rolls over, that's a good time to take profits. And this is not investment advice, just kind of some scenarios of what I would be looking for if I were trading it, which I don't have any positions in this. I'm just checking the chart out. But once you roll into a bull flag, there's kind of the really good bull flag like we just did, which is a sort of corridor consolidation a little bit to the downside. That's like maybe an 80% chance of flagging to the upside, right? Or you can get the more wild like pennant shape consolidation, which is still pretty good. Usually that'll pop again. The pointed like pennant flag shape is maybe like 70% chance of being bullish. That's a thing to look out for. And then there's the less awesome kind of rolling top kind of thing like this, where it's not flagging down, it's just like kind of arching and coming in sharp. If it's rolling and coming in hot, that's kind of like a 50-50 if it's going to hold support here or not, and you want to kind of wait for a bounce maybe on that. So those are kind of the flag shapes to look out for, and the consolidations. And then it could also, sometimes they check back and then they just take off again to the upside. But that's pretty rare. Like a parabolic reversal is pretty rare. It's actually more common to get another takeoff move here. But that's the thing to watch out for over the next day or two is a bounce. Do you get a peak reversal? Do you start rolling and consolidating? If you start rolling and consolidating, it's probably a bull flag. But if you're holding options, like you got to pay for all this time. So that sucks. If you're just holding long, this might be a spot to take some profits because generally a flag is going to come down and you'll have a better spot to re-enter here for day trading and swing trading kind of stuff. This is more of a swing trading chart. It's a longer thing. This last flag goes back to February. So that's the kind of look. And this usually goes lower than the peak that it checked back on. That peak's usually the high point. But yeah, sometimes it'll go higher and do weird. Sometimes you get super weird looking bull flags. If it's just super weird looking, that kind of goes in the category of a dangerous flag. But anyway, those are the kind of trading looks of what I would expect here after this check back today. But this is still a super bullish chart with a good trend line that's been going on for a year or something. Plus the S&P is bulling still right now. So the market looks good, the margin loans look good, all that kind of stuff. This is a short squeeze, so it's just got some power to the upside. So I guess just talking about the short squeeze, when you get these movements, these vertical up moves, especially when it starts going parabolic, the general idea with these flags is that people are short and then they run out of money on their margin loans. So when the shorts have to cover, when they run out of money, they don't want to cover, but their brokerage forces them to cover and will sell stuff and will sell their positions off. But when you're closing a short, you have to buy the shares up. And so when the short trades get in trouble and they start buying shares, it starts going up. But then when it starts going up, you have people with call options. So the market makers that sold the call options when it starts going up, now the market makers have to buy shares to cover the call options as it's going up towards the strike price. And so you get the short squeeze turns into a gamma squeeze. And then you get hype because it's going up. Then you get more bulls coming in. So pretty much just everyone gets on the long side of the trade, whether they like it or not. And you get these, parabolic up moves, and then you'll usually pull back or get a flag at some point. It'll, and these have been going up roughly the same amount here, like to here to here. And this is a parabolic chart. So, I mean, this is from $2 to 10. This one's from 5 to 20. and here, and then here we got another one, and we got a little pullback here. So we'll see the shape that we get out of this. I mean, you can see on this bull flag we pulled back twice and then peaked higher. So this is kind of a weird pattern to get coming into the flag, and then this is a really nice consolidation pattern that looks super bullish on this flag here. So it's hard to pick the top on these moves up, but you can look at the size of the previous one. That's a good indicator, which that is about the same size. So I think this move up is done, and we'll probably bounce and roll, and we'll flag again. I mean, that's just like the normal thing to look out for in kind of the short squeeze situation. Yeah, so we looked at the balance sheets and stuff like that, and then the other short squeezes that are going on. Gamestop is, what is Gamestop doing? Let's go on, what is this, an hour? That's fine. Okay, so GameStop did, I mean, the first bubble here, and then we've been in this consolidation for like a month and a half, and we just finally got to the very tip of this consolidation zone and broke out to the upside. Let me get in on like a 1 minute chart, because that's where I was drawing my lines. I've been trading this the last day or so. So when we got this breakout move here yesterday, this is where I started going long on the breakout for GME, but we got a really mean rejection again off of this 194, and this is the spot where, I mean, this chart just goes to the 194, like no matter where it is, like it goes back here. It's crazy. I'll pop back out to the 30 minute and show. So on the first bubble, this is where we gapped to the 194, and then we hit it a couple times on the topping pattern. We landed on top of it here and gapped out of there, right? And then when we had the flag, boom, straight into the 194, and then we hit it, broke it, collapsed on it, hit, like it's like 30 freaking hits on this 194. Like the whole chart is just all over this thing. And then when we broke out again here, immediately, bang, 194 rejected. So the GME chart, I'm out of it. I'll show you the account right now, I guess. Let me just do that. So this was my Roth IRA that I opened last week. I made a video on Roth IRAs. It's a really cool way to do a trading account. If you're day trading or swing trading, Roth IRA is really cool because you don't have cap gains inside of a retirement account. So you don't have to do any tax paperwork. You don't have to pay any taxes while the money's inside the account. But on a Roth, if you can take the account to a big dollar value, say it goes from 6,000, which is the max that you could put in for last year for me. Say I took it to 6 million somehow. This account, when I'm taking the money out, would have no taxes on it. And that's the advantage of a Roth. I think it's a cool thing. You can check out my Roth video on more information on that. But yeah, this I took it from 6 to 15 pretty much just yesterday and today, just trading that GME breakout. And I was hoping that we could pick up, like keep this support trend line here, you know, and try to break this 194, but we ended up breaking underneath the support and just doing this weak move. And so I just exited all of my GME positions. And this chart is just hard to trade right now because we broke down, but we didn't hold a bearish trend line. We did sort of a double bottom. It's like, this is sort of a symmetrical triangle looking breakdown. It's a weird chart right now. It's a weird chart, and the target is the 194 to the upside is the target where there's big time resistance, but we're probably under a bit of resistance right here where it fell out, and we obviously are no longer on this trend line, so this isn't going to be a bubble trend line that takes us through the neckline, which is what I was hoping for today, but once it went across this, that's it. So yeah. Due diligence on GameStop though is, let me go to the 30 and talk about what's going on. So I know back here at the bottom of the bubble is when we were having the congressional hearings, and DFV from WallStreetBets was, testifying to Congress and saying, yeah, he likes the price, and then he doubled down on his shares here, and then we got this crazy up move. That was the last time there was DFV drama. And then this week his call options were expiring, so he didn't sell them for cash. He executed them, or exercised them, sorry, and he's holding all the shares, and he bought more shares. So like DFV's position is like quadrupled down here now, and so that was big hype this week. And then also the big news from yesterday is that Gamestop has been issuing new shares at the market, and it ended up being 3,500,000 new shares that were issued, and the short percentage has been about 20% this whole time. And we've been consolidating down, and they've been issuing new shares, which all of the buy and hold, diamond hands hate. Issuing new shares kind of lets the short people out of their shorts. But what's happened now is they just announced that they're done with the share issuance, and now they have a strong balance sheet. Now they have new people on the board from all these tech companies, and so there's new money available, there's new people, they're focusing on e-commerce, all that stuff. So the future of the company is more exciting than a few months ago when they were just sort of like a physical, video game retailer. Now they're shifting to online. They have a good balance sheet. They have, this pile of money they just got from issuing new shares. And and DFV's position is wild. And so this is still like the number 2 trending name on WallStreetBets. And that's what's up now. I mean, it's just like a breakout, but a big time rejection off the 194. So, I mean, this consolidation ended and broke out already. So it's not really providing any kind of support to the downside. There isn't much going on actually to the downside. If it really broke down and like crossed over, let me see, there's probably a support line somewhere through here. Let me see what a downside target would be if it actually broke down here. We have a longer term support line coming through here. And so that would probably, say we trended along this line, it would be about 120. So that might be a downside support target with longer term support. If this 194 really rejected us out of here. And then I guess we would be looking at a consolidation zone, kind of like this out a few more weeks until the long-term support can kind of push us through the neckline. And that would be boring, but we didn't get it. We didn't get a breakout today. Well, so far. So anyway, that's the chart on GME. It's like this 194 is just a monster. You just can't get through it. But we'll see. We'll see what happens with that. And AMC is a similar kind of breakout. Let's go to whatever 30-minute chart. So yeah, AMC has a very similar big long-term consolidation and a breakout. And so this chart actually looks like it wants to come back and maybe top test this flag before it takes off. So that has a more obvious kind of trading pattern where there's a technical entry that makes sense. The GME chart is looking pretty difficult. COS is another similar one, another meme stock with the long-term, month and a half consolidation, little breakout. And this one, would be coming into kind of a support area anyway, but it's pretty close to the end of its consolidation area as well. So that's kind of look at the meme stocks. They're trying to break out, but they're getting stuck right here. So we'll see what they do. And then, yeah, we checked out Microvision. We're looking for the next kind of bounce on this and see if it rolls into a bull flag. And then Tesla's the third stock on this list for the WallStreetBets, short squeeze. So, I mean, Tesla was the huge short squeeze from last year that already did a topping pattern. already ripped to the downside, and now we're getting an interesting consolidation zone here. So, I mean, Tesla's been doing what would maybe look like a bear flag, but I mean, it's not in the middle of like a downtrend, and it's huge. It's just like just turned over and just started flagging. So, I mean, it could be a bear flag, but we have moving averages coming in. Let me show the daily moving averages too. So the daily moving averages, the 120-day moving average is coming in right underneath this support line. Back to hourly. The hourly moving average is kind of wobbling around, but Tesla loves this 700 line. So it's above the 700, it's above this support line, it's above the daily moving averages. So in order for me to get bearish on Tesla again, it probably needs to get down here below all that stuff and back test. But that could be a good short entry if Tesla breaks down under here. And then on the long side, I mean, you have the neckline resistance right here. So it's not a lot of upside before you get in trouble. I mean, a little bit of upside. Maybe like 100 to the upside before you run into resistance. So that's not too bad for like a swing trade. But being longer term bullish on Tesla, which a whole lot of people are, I'm definitely not long-term bullish on Tesla until I see the chart doing it. But what I need to see to get bullish on Tesla is, I mean, you can reject off this neckline. If you get up here to the previous highs, there's the odds of a big double top reversal. And so those are two big resistance areas. I mean, this whole area here is big time resistance. For me to get bullish, we're going to have to be breaking out to all-time highs and maybe back testing it and proving that we're getting out of here. If Tesla's doing this, I'll probably be bullish. But it's going to have to break out of the top of this thing. Right now, it looks like it already did a topping pattern, and now it's flagging out, which is most likely bearish. But it has to break down below this stuff before I'll actually open a short entry on this thing. And that's just kind of where Tesla is. ARK is doing similar. ARK and Tesla were the two that really like led the tech move down last month. And ARK's doing a pretty similar consolidation, except it doesn't have the same necklines and moving averages kind of helping it. Yeah, like the moving averages is coming in here near the top of this consolidation range. There's no kind of neckline support or anything like that. So ARK probably looks like a better short position for anyone that likes shorting this upper resistance area. But I'll go to the general market and say why that maybe not an awesome move right now this week is because we just popped out of this consolidation area and we have broke into the new highs here, and we caught support again today. So this is our our little bull channel, and we had the strong dollar for the last 2 months, month and a half, 2 months, and the strong dollar. We've had strong dollar and inflation like expectations going up. We've had interest rates on the bond trading going up, which is all bearish indicators, but we've also had inflation at the same time. We've had a lot of new margin loan coming in. So this is what you get. It's checking back, but not a lot. And we got right back up in the bull channel here. But now we're getting a weak dollar move. And so the dollar's gone weak for a couple of weeks here, and now it's just breaking down under the support that it's been bulling on for the last couple of months. So this is the first weak dollar move where I'm willing to say that it's making a weak move, but it's just short term. It hasn't actually done it yet. So I mean, longer term, we're going to have to consolidate under these averages, and we're going to have to start making another move down. Like, I'll get bearish on the dollar if it consolidates and breaks down. But there's an equal percentage chance that it pops above the averages and above support, and we get a strong dollar again. Like, that could easily happen as well. But just for now, the dollar's kind of neutral, I would say, until it makes its next move. And S&P is bulling pretty generically here probably until we get the next move. But if we get a strong dollar move, the S&P is probably going to want to come down here, and it may want to try to break down if there's any kind of other trouble. And if we get a weak dollar move, this thing probably wants to break out of the top and get up here. And so this is the big resistance on the general market. It's going to be in this 43 to 40, whatever, 40, yeah, probably in the 43s, sometime in the next month and a half. I think the S&P wants to bull up here to this long-term bull channel. Let me go out to, what, a daily chart? Yeah, okay. So you can see our little bull channel here is pretty steep. And it's a pretty aggressive bullish channel, but it's running right into our super long-term bull channel that we've had since 2008 here. And never once in the last, whatever, 12 years or something, have we ever attempted to break out of the top of this thing. So I think this is going to be extreme resistance if and when we get up here. I think that's what the market's trying to do. So yeah, anyway, that's a look at the general market and, you know, the short squeezes, kind of how they're looking, how they're working. I don't know if there's anything else too interesting going on. I mentioned this a lot. FCX, let's see what yeah, FCX is popping. Okay, this is kind of cool. All right, so FCX is the leader in the materials and like basic materials, minerals, metals, miners. All those sectors are what typically kind of rotate in and do really well if tech is rotating out. And so tech looks like it's rotating out. It just topped and pulled back real hard, and now it's just doing a really weak consolidation while the market is popping to new highs. And we've got, you know, the material sector didn't check back hard like that. It didn't do a topping pullback thing. It just consolidated a bit, and it looks like it wants to break out. So this is the area where I will be interested in taking long positions on the next trade entry. On the next kind of area where this comes back to support, I'll probably be looking at picking this thing up long, just for like a generic kind of buy and hold long position. And so this is Freeport McMoran. This isn't like a sector ETF. This is a big mining company that has a bunch of different types of mining, all kinds of mineral mining and metal mining. And yeah, I think this is a really good representation of that whole mix of sectors, and it's a momentum leader in all of those sectors. So that's my thing right there for the long trade, but it's only like a month or two until the market gets up to the top of that thing and gets into trouble. We could check in on Bitcoin. Bitcoin did, oh yeah, more power moves. Okay, so Bitcoin did a really bearish looking consolidation, which looked like an ending diagonal pattern, and then two really angry bear flag consolidations. This one broke down hard. This one broke down hard. Let me go to the daily. Boom. Yeah, the second bear flag broke down hard as well, but it broke down right into this daily moving average that was coming in. And so at the start of this consolidation, the moving average was only like in the 20s, right? And it was coming into the 40s. And I was saying we might pull back into this moving average somewhere in this range, like in the 40s or something like that. But this was consolidated for a month and a half, and by the time it pulled back, boom, 47. The moving average is right here, and we got a huge bounce off of this thing. So technically, this is still a really ugly. I mean, these from the Elliott wave kind of perspective, this is a 1, 2, 3, 4. Right, and then the 5 wave is this 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, ending diagonal in this ascending kind of triangle shape, and boom to the downside, right? So it's a pretty technically pretty textbook kind of ending diagonal pattern, which is really scary because those are quite often very long-term market reversal patterns. And so yeah, we got a big bounce here. And Bitcoin should be in the middle of the bull market because it's every 4 years it does this big bull market, and it'll blow off like December every 4th year. And so we should be in the, halfway up the 4th year. So I mean, this thing, if it follows the cycle, 4-year cycle, it should be it should be ripping to the upside until December, and who knows where. It could be in 100,000 or 200,000 or something like that range, maybe, just based on kind of the angle of what's happening here. But generally, when Bitcoin pulls back into this moving average, it just slingshots to the upside. So, I mean, I have a short-term upside target to like maybe 80 or something. And that, I mean, that could happen pretty quick. If we get a bounce, especially if we break the highs, like boom, we'll just go to the 80s or something. So on Bitcoin, I got call options down here around that bear flag bounce for the end of next year, like super long-term call options on Ledger X. They have mini call options, so you can buy them with less money. So those are fun for playing around with Bitcoin call options. And let's get in closer on this chart. And I struck at 100 just because I like the price at that level. I might have struck at 200 if I liked the price, but I didn't like the price at 200. So yeah, this is pretty interesting. It looks like we just hopped on top of a level and now we're just bulling. Just hopped on top, picked up support. That shape was a little sketchy looking. It looked like a triple top that might be kind of a head and shoulders reversal, but it popped already. So I think Bitcoin, it's safe to say it's bulling now, and it probably doesn't run into resistance again until about 60. And then the top is, 65. So there's a couple levels to get through here, but it looks bullish to me, regardless of this the pullback pattern. This consolidation pattern is still kind of scary, but I think this thing's bullish until it does some sort of technical thing that changes my mind. But anyway, that's the look on Bitcoin. And then I guess maybe we could look at some Bitcoin related stocks like Marathon, MARA. This is a Bitcoin, or it's a tech stock that does Bitcoin mining. And so this thing's been bulling real hard with Bitcoin. And it's just doing a consolidation zone here. Something like this. I did a good bounce there. And yeah, this might be a really cool buy zone. If this comes back down into this kind of level here and we have Bitcoin taking off, this could be a really cool spot to go long. Marathon, maybe with call options. And I'll be actually checking that out. I might grab this thing up if it pulls back a little bit more. Yeah, cool. So yeah, that's Marathon. What's this one? MicroStrategy. Oh yeah, this is Michael Saylor's company that it's the first company to put a huge amount of their cash, the company's cash, into Bitcoin. So he's holding a mess of Bitcoin, and so people are trading this sort of along with the Bitcoin chart. It's doing a big time consolidation pattern. I don't know exactly where it is, but yeah, this thing is just expensive and it's consolidating. I don't like it right now. If it consolidates down and does a bullish breakout over here, this one could become interesting. For right now, it's just kind of up there. It's up there, and it might have another bubble trend line, but I don't know where it is. It's not doing that. I mean, yeah, there could be another bubble trend line coming in here, but you just can't see where it is right now. So anyway, that's another Bitcoin stock. Marathon and MicroStrategy are the two big kind of companies that are highly related to Bitcoin. Tesla has a little bit of hype from Bitcoin because they bought some Bitcoin and they're going to try to start accepting Bitcoin payments and stuff like that. Anyway, that's probably good. This is not investment advice, just a couple scenarios. A look at what I'm looking at right now on the trading, and yeah, that's the due diligence and the technicals on Microvision. It looks pretty bullish, and that's a cool one to take a look at. But I'm actually not interested in it probably anytime soon because it's just consolidating across. And the only thing I would be looking to do on this is if it does a double top I might short it. All right, that's it for like this week on Microvision. So cheers, happy trading.